Good morning. According to Benjamin Franklin, taxes and deaths are the only inevitable things in our life. We have to pay our taxes, of course, but there are a number of things that can be done to minimise the tax that you pay and to help you reduce your tax bill. I'm going to share some tips, 5 at this stage in this video, but there are many other ways that I can help you with advice and guidance on all tax matters. So if you want to discuss anything in detail with me or require advice on any of the tax saving tips that I'm about to give you, then please do not hesitate to contact me. So first of all, have you considered charitable giving and gift aid payments? When you're making a donation to a charity under gift aid, not only does it allow you to reclaim extra money from the government, but for you personally, if you're a higher rate taxpayer, it means that you're entitled to additional tax relief on the donations that you make. Keep a record of any gift aid payments and these will be reported on your tax return and the additional relief claimed. Second tip for today, make personal pension contributions. Making payments into a personal pension plan is a very tax efficient way of saving money. The payments that you make are topped up by the government, so for every £100 that you contribute, the government will add £25, meaning that your contribution in total will be £125. Also, if you're a higher rate taxpayer, you will get additional higher rate tax relief on the overall £125 contribution made, making pension contributions very attractive. So if you're not earning or have relevant earnings for pension purposes, then you can still contribute a maximum of £2,880 per year into a pension. That's £240 a month, and the government will then top this up to £3,600. Third tip for today, be tax efficient on your savings income. If you're a basic rate taxpayer, then the first £1,000 of any savings interest income received is taxed at 0%. If you're a higher rate taxpayer, then only the first £500 of savings interest is taxed at 0%. If one partner is a higher rate taxpayer and the other is a basic rate taxpayer, then there are efficiencies in having savings held in the basic rate taxpayer's name. And also, don't forget to use your ISA too, based on current rates. £20,000 per person can be put into an ISA this year. The ISA wrapper ensures that any income in growth is free of income tax and indeed capital gains tax, and it doesn't need to be reported at all on your tax return. Using an ISA is also a useful technique for converting potentially taxable interest into non-taxable income. Next tip for today, invest money into an enterprise investment scheme or a VCT, a venture capital trust. There's immediate tax efficiencies of investing into these schemes. Both will give tax relief of 30% of the investment, and this will come in the form of a tax reducer in your tax return. Now, this is a complex area and I'd like to speak more about it, so there will be a different video on this. But for example, if you invested £100,000, you'll get a £30,000 reduction on your tax bill, regardless of the top rate of tax that you pay. Also, the income that you receive from these types of investments are free of income and capital gains tax, and these do not have to be reported on your tax return. Obviously, with these type of investments, there are risks involved, and there are limits on the amount that you can invest in both types, but there are also rules around how long you have to hold these investments for. So careful consideration to be given on that one, but a phenomenal tool to save money and indeed make money. Next, and the last one for this video, a couple can make a claim for marriage allowance, and that's where you can claim a proportion of your partner's unused personal allowance. For 2019-2020, the current tax year, you can transfer up to 10% of your personal allowance. That's £1,250. So the tax benefit is worth £250 for this year. Rules do apply, but one of the couple must earn less than the current personal allowance of £12,500, and the other partner cannot earn over this amount, but must not be a higher rate. Can earn over the amount, sorry, but must be a higher rate taxpayer. The good thing is that if you have not claimed this before, then you can make a claim for this for the previous 4 years. So in total, that's a tax claim of over £900. Hopefully your accountant is looking after you and helping you with saving tax, but if that's not the case and you want further advice and guidance on any of what I've spoken about, then contact me to arrange a free consultation. I do want you to pay tax, but no more than you have to. Thank you. Have a great day. Goodbye.